So, Weiss, what do we take away here for ARK? I mean, that was the biggest takeaway for me yesterday in overtime when this news crossed the tape. It's like Kathy Wood's been buying it lately, you know, and she makes the case, and she's made it on this show and other shows about the long-term perspective. She's not looking for tomorrow, and she's not looking from 5 weeks or 5 months from now. It's a 5-year game, generally speaking. But there are a lot of people who continue to put money into the ARK funds, Steve. And this was a huge blow-up. So what does it say about the strategy of owning these kinds of companies now?
Right. Well, look, you know, Kathy's had a lot of success up until this point, and she has a discipline, and she has no choice. She's locked into that discipline and has to stay with it.
You don't need to buy more.
But I also think you
don't need to keep loading up on more.
No, you don't. And I agree with that. And let's look at Teladoc specifically. I think it probably is still a short from here. You know, I don't know if John goes to the doctor at all and does telehealth, but it's a complete commodity. The company's losing money. They're losing money next year. They're losing money this year. What's the appropriate valuation? If you do a Teladoc visit, it's not Teladoc. It could be the system that's created their own, a hospital system, a big practice group. So it's completely commoditized. So I wouldn't buy any more. So I think that there's a flaw in the research, that's going on there, frankly, because that's apparent to everybody. Now,
I don't even know if it's if the most egregious thing, if you want to use that word, is that it's a commoditized business, as you say. I don't know, Jenny, how many of these stories we have to have before we finally realize that anything that had massive demand, specifically because of the pandemic, is not ever, arguably, going to have that level of demand out of the pandemic.
Right.
If you couldn't go to the doctor's office during the pandemic, you were happy to use Teladoc. One of the things that you're going to want to do outside of the pandemic is actually go see your doctor, not see the doctor over a video screen. So I don't understand why this story is so hard to get. You could see it from Peloton. Was that story hard to get? Netflix. Was that story hard to get? What's the next one?
The key word you're using here is story. And we need to think about the fact that a Peloton, a Teladoc, they're trading on the story. Right? They're not trading on the valuation. And so you're right. Let's say that Teladoc is innovative and that some part of people will always use Teladoc or at least have part of their medical, I don't know, repertoire of doctors' appointments in the future through Teladocs. But they are going to want to see their doctor. So we know that going forward, we're probably going to be less digital than we were in the worst of the pandemic. But again, there's the story and there's the valuation. And what we continue to see over and over right now is that the stories are not good enough to support the share price. We need the valuations to kick in. So there's a big difference. And Steve actually used a word, discipline. And that's another word that I'd pick on, which is, what is the discipline, right? Is the discipline just to increase positions, or is the discipline to say, hey, we invest in innovation, but we do that at the right price for companies that are making money? So you can look at a Zoom, which is going to earn about $4 a share and is trading right now at about $100. That's a 25 times multiple. That has real earnings. Like, where is the difference there between a Teladoc that's just a story with no earnings and a Zoom where there's earnings and a real valuation? And I think that we need to remember this year, stories are out, valuations are in, and the stories, yeah, they were, as you said, Scott, they're not going to get better than what they were. They might have a long runway, but they're never going to be as glossy and as perfect as they have been.
Well, look,
over the past couple years.
The question is how much more do these valuations of companies like this need to come in, right? They correct so severely, and then you say, okay, it's come down a lot. Maybe it's time to buy. The market, and then the earnings and the fundamentals come out, and then it's like, no, maybe they need to correct even more. And that's the great unknown, as Jenny so aptly says. I mean, what price are you willing to pay? And the market's trying to figure that out.